Today I'm really excited. Right now the channel is showing 1499 subscribers. So by the time this video is uploaded, it should have crossed 1500. So I'm really excited about that. Today, as you know, the video is going to be about finance and I have a really good video for you. But first, let's answer a question. This is a question that many people have been asking me. Arshab CP asked me and many other subscribers over the days have been asking me, what do I do for my primary income? I've always taught you that don't ever depend on one income, maintain multiple streams of income, try to grow multiple streams of income. But if I were to name a primary income, it is I run 3 businesses. One is me and my partners are one of the biggest solar and battery distributors in this state. Second is I run a consulting business where I help large businesses to grow their infrastructure and their business development. And the third thing is I have an IT company that does projects for some of the top 50 Fortune 500 companies. So these are my 3 primary sources of income. Other than that, I do my own investing and things like that I'm going to teach you right now. Before I begin, just tell me, do you like long videos or short videos? If you like long videos, there's a poll up here. Just answer that poll so that I can maintain my video timings accordingly. So if you like long videos like the last one, the 15-minute video, some of you have said that it's too long, we are not able to follow for that long. Just answer that to me so that I can improve accordingly. So let's get into it. First, let's clear some terminology, because we have to understand that when I say that today, it's impossible for me to do finance videos without explaining these terminologies. So one is long and short positions. Shorting, as I told you in the last video, you are shorting the stock, and that means that you make money when the stock goes down. The market goes down, that time you short. Long position is you are expecting a gain. If you're saying that I am 50 long Google, that means I have 50 stocks of Google and I'm expecting it to go up. Okay. Short position means I am 50 short Google, means I expect Google to go down. Stay tuned in this video. In the end of the video, I will be explaining options. Next thing you have to understand is day trading. As I told you, you're getting into the market and getting out of the market on the same day. Swing trading can go through a few days. Some people even do swing trading across a month. If you are day trading or even if you're swing trading, you have to understand that most number of volumes in the market are handled in the first 2-3 hours. There's a large number of stocks available for you to buy when the market opens, and that volume stays high till about 11 a.m., 12 p.m. and sometimes even till 1 p.m. After 2 p.m., the lunch time, most of the volumes start going down and you might have difficulty. So if you are doing large volume trades, the time is the morning, and you always see the most volatility in the morning. So the most money you can make in day trading, that's always in the morning because the volatility is high. Next 2 terms we have to understand is bull and bear market. What do you mean by a bullish stock and what do you mean by a bear stock? What do you mean by the market trend is bullish and the market trend is bearish? Bull, I always want you to remember, it goes up. Bear is always down. It's about the way they attack. Think of it this way, the bull's horns are always up and the bear is always clawing down. So that's the most easy way to understand this. Next thing you have to understand, now we are going to get into patterns. Why do you need to understand patterns? Patterns are very important when it comes to stock market analysis, as in a single stock or even the entire market. If you want to analyze the Sensex, the Nifty, or even the Nasdaq, any stock chart, if you need to analyze it, you need to understand these patterns. Patterns, as you know, they are something that will repeat. So we are looking for patterns that are going to repeat. How do we do this? We use something called, first is support and resistance lines. Let's understand this. If I'm going to show you a stock, in this you can see that there is a constant trend and one is the support line and the second one which is marked here is the resistant lines. Support and resistant lines are something that you are going to use to understand the trend of the stock or the market that is coming in. So if you want to understand what the trend is for this stock, you need to understand where it is going, how the performance is going. They are easy to understand, and that is something you can use to understand the stock trend. Before we go deep into the stock charts, the first thing you have to understand is candle wick patterns. Whenever you see a red candle, that is a bearish candle, and whenever you see a green candle, that is a bullish candle, that is the trend is up. So a bullish candle is always going up, it is green, and you will see that it signifies that the stock is going up. A bearish candle is red and it signifies that the stock is going down. With that, we get into our first two patterns. One is a bullish flag and the second is a bearish flag. A bullish flag, as I show in the chart here, it shows that the stock has a trend to go up. Using the support and resistant lines, you can mark that okay, this stock has a chance to go up and that is its trend. It is a bullish stock. A bear flag is the exact opposite. You understand with the candle wicks that this stock is going to go down. So you understand that okay, this is a pattern that keeps on repeating. It is a bear flag, even though the stock at a whole might be showing a different pattern, but a certain trend is showing a bearish flag. Next, we'll get into the flat top breakout. In a flat top breakout, the support and resistant lines will show you a flat line. That is, the support lines are also flat and the resistant lines are also flat. And suddenly you will see a breakout, that is a trend that the stock is going up. This could happen due to many reasons. Maybe investor has put in a lot of money into the company. Maybe the company has launched something new. Maybe after a certain AGM, the company has got a breakthrough and it is actually making a lot of money. And it has become popular with the investors. So suddenly people are starting to put in a lot of money into the stock. That is a breakout pattern. So it was flat and now it is breaking out and you're seeing a trend upwards, a bullish pattern. And that is something that you have to look for. As your homework, you have to go through all these other patterns which I am putting on the screen right now. All of these patterns, please go through them because they are simple patterns. I will tell you the most important patterns in an upcoming video, but these patterns, once you have understood what they look like, just make sure that you understand that this is a pattern. There are only 4 patterns you are actually going to need to understand the trend of a stock. That I'll give you in a video further down the line where I explain the most important stock patterns to predict a stock trend. Now before I close this video, I want to quickly touch on something called options. They are an essential part of trading and you need to understand 2 options because that is going to be important in the videos further down the line. Call and put options. Call and put options are 2 options that you can get. Option, as the name suggests, is simply that you have an option to buy a stock at a later time at a given rate. Both put and call options look similar on paper, but they have a major difference. Call is the right to buy stock and put is the right to sell stock. If I have a call option, that means I can buy stock. I have the right to buy stock at a set price on or before a specific time, and I might have to pay a premium for this because I'm buying an option. Put option is exactly the opposite. I have the option to sell stock at a set price on or before a particular time, and I pay a premium for this again. Now what you have to understand is, when do these options make money? If it is a call option, it is going to make money on a bullish trend. That is, the market is going up. That time the call option is going to make money because you are able to buy at a lesser price. A put option is used when you think that the market is going to go down. That is, it's going to show a bearish trend. I know that the market is going to go down, that time you use a put option. That way you will make money when the market goes down. Both of these options, they always have an expiry date. You can always sell these contracts as they reach their expiry, but the closer they are to their expiry, the less value they will get. The only way you make money, because you are already buying it at a premium, you have to buy it at a premium. So what is going to happen is you have to make money before the trend ends. Before that time, your whatever prediction that you have made, the bullish or the bearish pattern has to happen, and you have to make a profit. Otherwise your options will expire. Once an option expires, you can't exercise the same option. So we touched on two options, that is call and put options. In the next video we'll be going further down the rabbit hole, and I will touch on futures, index futures, because many people confuse index futures with index funds. I don't know why it is so. Maybe they don't understand the market. We'll also understand commodities, and we will look into forex. What is forex trading? In the next video I will go through all of that. Also I will go through how you have to select your amount that you're going to invest. What is the safety that you can use to invest safely in the market? This is a requested video and I will be doing it next week. How a beginner can invest in the market with little risk. That is the video that I'll be creating, and if possible I'll mix both these videos into the next video. As always, if you have any comments or suggestions, leave them in the comments below. If you have any topic requests, leave them in the comments below as well. If you want to get in touch with me personally for any business advice, entrepreneurship advice or anything like that, just WhatsApp on the number in the description and my assistants will set up a phone meeting with you. 30 minutes is going to cost you 1000 rupees. Like, share and subscribe. This has been Jamie for TopEvt. I'll see you in the next video.